students, welcome to our channel, theaccountingiseasyph.com. I'm your coach for today. I'm Coach Becca. Our topic is all about the rules of debit and credit. Let us first revisit the accounting cycle. So what is this accounting cycle all about? So in the previous topic, Coach Ken and Coach Arnel already discussed how to record the transactions. So this is analyzing the transactions and recording the transactions in the journal entry, which is the book of original entry. After that, you post the transactions, your journal entry to the ledger, and we call it the book of final entry. And then prepare the trial balance, make some adjusting entry, prepare another adjusted trial balance in preparation for the financial statement. Normally, after preparing the financial statements, we close the income statement account and prepare a closing trial balance, which is in preparation for the next accounting cycle. So how these rules of debit and credit incorporate in the recording of our transactions? So in accounting, we are using a double entry recording of accounting transactions. Double entry implies that transactions are always recorded using two sides, the debit and the credit. When we say debit, it refers to the left-hand side, and credit refers to the right-hand side of the journal entry of account. And take note, the sum of the debit side must equal to the sum of the credit side amount. So don't forget, the debit refers to the left-hand side, while credit refers to the right-hand side of the journal entry. Okay, now, where we can see the debits and credits in accounting. So we can see it in the journal entry, in the ledger, and in the trial balance. The journal entry is the book of original entry. It's the entry to the journal. And we say journal entry is balanced if the sum of debit is equal to the sum of the credit. We can also see the debits and credits in the ledger. Ledger is just like a T account. The left-hand side is the debit, while the right-hand side is the credit. We can also see the debit and credits in the trial balance. Another way of analyzing the rules of debits and credits in accounting is on the analyzing of the value received. When we say value received, you put it in the debit. When we say value parted with, you put it in the credit. So let's say, for example, in transaction 1. Company A sold its product at 2,000 and received the full amount in cash. So what is the value received of the company? So take note, company sold, it is an arm's length transaction. So there is a customer, you sold product, 2,000, and you received cash. So this is a cash sales transaction. So the value received is cash. You receive cash. The value parted with is sales. So in accounting, our journal entry would be like this. So there is a hanging indentation. You receive cash. This is the debit amounting to 2,000. And then your value parted with is sales amounting to 2,000. Observe, it is balanced. It must be balanced. Debit is 2,000. Credit is 2,000. But the account, remember this account? The account that is debited is cash, since you receive cash. The account that is credited is sales. Okay, so let's have another example. Say for instance, on January 1, Ms. Farida invested 100,000 at the inception of the Business Express Travel Agency. So take note, in accounting, the owner is separate from his business, and we are recording the business part. Okay, so we are recording on behalf of Express Travel Agency. Express Travel Agency received 100,000. Okay, so received cash 100,000. This is the value received. And then what is the value parted with? What would be our credit? So there is a capital invested by Ms. Farida. Ms. Farida is the owner. So our journal entry would be like this. Debit cash, this is the value received amounting to 100,000. The value parted with is capital amounting to 100,000. And we call it investment by the shareholder. Next. On January 2, the company purchased office furniture and equipment for 15,000, for which 5,000 is paid in cash and the rest would be paid later in January and February. So what would be the value received? Of course, You purchase office furniture and equipment, so you receive office furniture and equipment. Then what is the value parted with? You paid it in cash, but there is a balance amounting to 10,000. So what is this balance all about? We purchased furniture and equipment, and then we paid it in cash, 5,000. There is this balance, and this is our payable, and we call it account payable. So in our journal entry would be like this. Debit, furniture and equipment amounting to 15,000. Credit, cash, amounting to 5,000. And accounts payable, 10,000. So take note, the debit must be equal to the credit. 15,000, furniture and equipment. This is our debit. The credit, we have two credits, the cash and the accounts payable. Cash, which is 5,000, the accounts payable, 10,000, and when we sum it up, 15,000. So still, our journal entry is balance. Okay, another way of presenting the rules of debit and credit is on the effect of the transactions, or is on the effect of the account. Okay, so in accounting, we know that we have asset, expenses, drawings, income, liability, and capital. So what is the effect of the debits and credits to this account? So as you can see in the left side, we have the debit, we have this asset, expenses, and drawing. On the right side, we have this credit, we have the income, liabilities, and capital. So remember the acronym AED, debit, ILC, credit. So we have the asset, expenses, and drawings on the debit. We have also income, liabilities, and capital on the credit. So what is the effect of debit and credit here? So actually, this is called normal balance. Okay, so if the asset, expenses, and drawing is on the normal balance, which is debit, it increases the account. So if, on the other hand, if the income, liabilities, and capital is on the credit, so it also increases the account. It doesn't mean that debit will always increases the account and credit will always decreases the account. It depends upon the normal balance of the account. So remember, debit increases asset, expenses, and drawing. Credit increases income, liabilities, and capital. So if asset, expenses, and drawing would be on the credit in the transaction, it will decreases those accounts. So just remember the normal balance of the account. Asset, expenses, and drawing, the normal balance is debit. So if it's not on the normal balance, it will decrease the account. But if it is in the normal balance, it will increases the account. Okay? So remember the normal balance. Asset, expenses, drawings are all in the debit side. Income, liabilities, and capital are their normal balance is on the credit side. So in summary, the normal balance of account is like this. You can also present it in another way. We have this acronym ALOVE. Asset is on the debit, LOR is on the credit, expenses is on the debit. Okay? And then remember the normal balance. If they are in the normal balance, the effect of that increases the account. If it's not on the normal balance, the effect of that is on the decreases the account. Okay? So I hope you understand our topic, the rules of debit and credit. And don't forget to subscribe to our channel. Okay? So accounting is easy.th.com.